Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
It is my hope and desire that each week I can kind of steer you guys towards a better plan. Just keep an eye out for different risk management things that pop up. And actually came across, which I rarely repost, other blogs, but actually came across a really good one on Light Forex, which I posted to the Market Watch channel. So if you're not subscribed to my Market Watch channel, I'd say please get subscribed, but we're shifting everybody over to the Auvoria Prime community, which you guys see right here. So, bookmark this. They're still ironing a few things out. So we're presenting obviously via Zoom today, which will more than likely be the case on Saturday as well. So, but the community is actually really good. I'm going to start the post in here. And for the question I actually got last week, and I can't tell you how many times I've been in even some of the smartest people's offices or homes. They're managing, and this is risk management, actually, just not related to Forex, but just in terms of like personal security and stuff. I don't know if you guys have ever installed a program called LastPass. So if you haven't and you want to take a closer look, just Google LastPass. It's actually one of the best vaults out there that is a plugin. It does not do any disruptions of either your Firefox, Safari, or Chrome browsers. That is actually a great place to store. And I've got probably 200 or 300 passwords in here, all related to business, and just all of my stuff is in here. So it's actually a great way to sort of keep your passwords. And the LastPass company truly is a vault. So it cannot be hacked into. I guess I shouldn't sort of jinx myself by saying that, but I think in terms of just understanding how it works, it's a good plugin. So let's take a look at the Forex calendar here. Talked about this in pretty decent detail on Saturday, but I always seem to get questions about filtering out stuff. I only care about red folder events. Anything that is a gray folder is usually like holiday related stuff. So like here's the bank holiday that was yesterday. This is why the GBP pairs were a little calmer because of yesterday. So do know that we got OPEC if you guys are trading oil. That's coming up tomorrow, which is September 1st. So today, essentially looking at the calendar here, this is Pacific time here. So we are on the 31st. The new month starts obviously tomorrow. Non-farm payrolls are Friday the 3rd. So be aware of all those events moving in. And then obviously we have the Labor Day action here. And in my opinion, when we start to see the 8th, 9th, and 10th, that's when everybody's back at their desks in New York. Okay, so for lack of a better explanation, or I should say in the UK as well, that's where most of the money's traded on this planet. So you really want to be cognizant of how some of the hours, which typically is lower volume, stuff like that. I've been talking about this for a month now. It's getting kind of dead horse beating, but just understand that as more volatility comes in, it can increase the volatility, obviously, and or the daily ranges of any of these currency pairs. So that being said, NFP Friday. Remember, these times are usually not synced up correctly, so just pay attention to these times in your time zone. Let's take a look at the charts here. Not going to go through this too much today. And a lot of the action's actually been taking place in equities as we're continuing to lift up. This doesn't probably tell the whole story here, but in terms of S&P 500, a lot of equities have just lifted a bunch, especially some of the top-rated stuff. A lot of the IBD 50 have lifted, but we're not quite at all-time highs in the FTSE 100. DAX close to all-time highs, and then the stock 600 not quite there, but we're almost near all-time highs. Whereas emerging markets globally in equities were nowhere near highs. So if we take a look at the DXY and you have not joined us the last few weeks, I've been talking a lot about how important this whole 94-ish level was as far as resistance to the upside, right? It's contained us quite well. And then we're looking to, at least I personally would like to see us go back and make some sort of break from this range one way or the other, right? Either zoom up above 94, in which case we probably got a pretty decent amount of dollars to travel, so to speak, or drop underneath this edge of the cliff down here in this 89.35-ish area. Looking at the weekly charts, give you a little bit of a how long we really have spent here and how important this 88-ish, I should say this 89-ish area is as far as the floor. So I've been talking about this a lot. I'm not going to belabor the point. Many of the best prognosticators in Forex out there and general bond movements are looking for us to touch this 85 area, which is the top range of the previous period, which is almost 6 years we've been in this upper range. Okay. So it'd be like sort of like the ultimate move down to a much lower area, which is a devaluation of the dollar, which will increase the value of almost every other currency. So let's go back to the daily charts. Again, euro, not going to belabor the point. You kind of see on the charts here, we really are edge of the cliff. In fact, the dollar does rip above the 94 area, 93.75, 94. You're going to see this area just give away big time. All right, just be cognizant of that. Don't step in front of the freight train on something like this, in my opinion, or accepting trades, in my opinion, that are counter to this move, right? Even though a lot of these MAV-based softwares and these versions, in many cases, could, it's in some of these, like the Gearbox, which is a martingale-based system, could accept trades underneath. They're trying to catch that or stand in front of that trade train, catching that thing going off the cliff. But initially, when that move takes place, which is usually a few days, in my opinion, I really don't want to go against the grain on that. So I've talked a lot about that. GBP, here's how much time we've actually spent in this upper range, which is quite a bit. US CAD, note this rejection reverse. I talked a lot about this in previous weeks. This was a complete reversal. I think this probably had something to do with that candle as well. We have sort of a double print, if you will, a more recent resistance red line, the squeeze zone indicator, and then obviously a longer term, much more broad, just above that area. So it'd be interesting. But right now we're what they call chopping broccoli. It means we're trading around in the middle, right? These are typically the areas where most traders just get chopped up because they're too busy trading the center. I always would advocate, if you really are building your own plan, or if you want to go with Arrow or the Hawkeye guys, or whatever your particular plan is, which I think really should encompass some sort of automated or automated trade requests sent to you, and some sort of manual strategy as well. This is not an area to be playing in unless you're a real sophisticated trader. Protect your capital. Some of the things I'm going to go through real quick in this major Forex mistakes piece that I posted to the Market Watch channel. One of the big things is over trading, and it's in many of these top lists of mistakes that newbies make. But just remember, sitting on cash and protecting capital is a position as well. USD JPY still despite that tight range. I'm really going to comment on that too much. USD Swiss. The interesting thing about all of these pairs, and I don't really know how it relates to anything more than just a broad notification of risk. My two brokerage firms I deal with on the futures side, we can trade a CME version of this pair on the Chicago Mercantile Exchange, where most futures are executed. The margin, intraday margin rates, and the margin levels for this particular pair have gone up 2x. So they're seeing something in their algos that's telling them we can't let customers trade real heavy on margin in this. And I've thought about what would be a great way to equate that. I think it probably would be the type of move where if you had a 1 to 500 leverage inside of some sort of forex brokerage account, essentially recently they just made you take it down to 1 to 100 for what it's worth. Australian US bounce, almost a reverse of what we saw before, coming up against a number of moving averages to the upside. I think it's probably going to be into next week before we can sort of put any oomph, if you will, into some of these movements, because I think more volumes can be coming back into the marketplace. If you have not heard me say this 100 times the last few months, most mutual funds on this planet, I don't care if it's Oppenheimer, Vanguard, whoever the company is, and a lot of ETFs have a October 31st settlement for not a calendar year end, but what their fiscal year ends. So that's why you see a lot of juxtapositioning taking place throughout the month of latter September and into October. So just understand that historically win rates on almost all patterns of trading, just broadly, I don't care if it's equities, forex, futures, options, whatever commodities, they're lower. So just note that. Canadian Swiss, volatile, but essentially still in this whole range we've been in. Don't really have much more to say about that. GBP CAD, let's take a look at the NEO currency. Still inside a tight range. Again, there's that hammer reversal, right? Talked about this a bunch the last few weeks. Brought us back down inside, which typically argues, if this was to have formed on the bottom or the top, typically argues that more time needs to be spent building a base. Essentially balancing or auctioning, if you will, between the low and the high points, which are right around the 75, 100 area right here down to 73. Easy to see. Can't tell you when it's going to break which way or the other. Again, as I've mentioned, I think it all starts with what's going on with bonds globally, from developed markets only first, US Treasuries being number one. Then we move into what's going on with the dollar. All right, so those two factors of money supply affecting both of those big markets first is what needs to be analyzed. And if something can be forecasted as a breakout from that area, you would apply that to what I would consider this to be as one of the other majors. So GBP in relation to the USD, right? CAD in relation to USD in terms of analysis, and then you can overlay the thoughts on how this would move. Seems confusing, but you're just working from the big dogs down to see what's going on. That'll help you have a better idea of what's there. Or you could just listen to NEO. Weekly chart. I think I talked about this Saturday. Yeah, you can see how real defined range, balancing and auctioning back and forth, up and down. Nothing really as far as a break. Do note that volatility has died down a lot of this pandemic stuff. Whether there's variants popping up and potentially causing problems or not, it hasn't brought quite the volatility into currencies that we saw, back towards the springtime and then the whole previous. But this pair has been acting quite well on a weekly chart. Pound Swiss daily, still in that tight range. We've been in for a while. AUD CAD, again, tight range. This one certainly looks to be coiling. Good break. Do note, if you hadn't heard me speak on Saturday about this, a lot of developers have removed the CAD pairs from their systems. And I did want to note GBP NZD. Where is it? Pretty big move today. And historically, there's been all kinds of back testing done for this currency pair. It's like, hey, that's great. There's lots of trades to take. But I consider this personally to be the widowmaker. It's blown up a lot of developers that we've had, that we've talked to, and developers that we've blown out and gotten rid of because of just the moves. I mean, look at today alone. This thing's up, or I should say, this thing's down almost 0.75%. It's a pretty big move in relation to the relative flatness, if you will, of most of these other currencies. Stair step up since our big support area in spot gold. Looks like we probably want to auction up to 1831 area announced. What else? Here's the Bitcoin chart. Gives you an idea what it's done all year. Actually, let me just, what it's done since approximately the beginning of the year. I can't tell one way or the other where this is headed. We're in a trend up, but now we're essentially trading sideways around, where you've basically the neckline of this whole head and shoulders, which is right around this area. So it looks like we need to spend some more time and or get some sort of global news one way or the other on either the acceptance or non-acceptance of any kind of crypto in order to get this to move out of this area. But do note the smaller volumes here. So maybe it'll take into next week. Maybe not. Maybe I'm wrong. As far as getting some bigger volume, have a more pronounced move. Ethereum, real quick. Chart looks the same as the Bitcoiner. This is the new currency on the planet. No, shouldn't say that. New currency on my trading view systems. Cardano. I would not be chasing this up here. Wait for a correction. At least put it on your radar. It is the number 4, arguably, globally. All right, let's talk about trading mistakes. So this is a piece, and you can see this on my channel if you wish to do a deeper dive. I'm not going to read this to you guys. Just want to bring up a couple of points here. This is really just common mistakes. This one right here, number 1, I want it all right now. This is what we call the gunslinger tendency or tinge, if you will. And essentially it's somebody that just wants it all right now. And they are willing to just, it's that dice roll, right? You guys have seen it. I'm not going to boil all these details. But what I do like about this post is that they put a solution in. That's pretty cool. I don't see this a lot, right? The solution in this particular case is essentially just understanding that the wealthiest of people that didn't inherit it, right, that didn't hit the lottery, but actually built a business or whatever that made them wealthy. In most cases, they built a business. They've been through a lot of pitfalls, right? Took them in some cases a long time. Look at the story of Steve Jobs. Guy didn't hit his glory, until 20 years after forming the company. So I'm not saying have that kind of patience. Just don't be that person that wants it all right now. This probably single-handedly right here kills more Forex trading, and I should say kills more trading accounts, period, single-handedly. The other one that could be just as bad, at least from my mind messing situation, as I call it, or that inner monkey I talk about, is killing it right off the bat, right? Because this just makes you feel like you're God's gift to trading, and you are, really. And I'll tell you, for what it's worth, the author of this blog, this guy did the kind of research I used to do back in when I was really getting into the futures trading back in 08, 09. 10, where I would just spend hours taking notes all day, 12 hours in front of the computer. Love the dedication here. But the point of this really is that understand that large profits that come up front trading anything are more than likely luck, right? I'm not giving you the credit, okay? are more than likely decent, good luck. Now, we all would rather say, yeah, I'd rather be lucky than good, right? But at the same time, just recognize that, because that's one of the most important. Recognize, okay, I killed it. I need to take a step back and journal. Journal is fantastic in whatever form you want to use software. Just writing it down in a book, printing off the chart. Journaling is fantastic. Just understand also, most of the top Forex traders, even if you guys, or I should say, even if they have been as lucky as you guys to have been given a strategy with a high win rate and or algos that can trade for you, or at least give you signals to trade, with decent, in some cases, good win rates. So you guys are very lucky from that respect. But just like I told almost every student I've ever had and client, vast majority of people out there could actually take every trade that I call out, and they would still find a way to screw most of it up, even if it was the perfect entry, right? Because they didn't manage a trade right, or they didn't take scales off at certain points, or let their runners run, right? Set the profit, keep moving stops up, or what have you, trailing stops, all that. It's kind of the same thing here. So lack of experience, we're getting you guys past all that. Hopefully that's an easy one. But just understand why there's a solution, but there's also a reason where there is that impatience among traders, right? Now, a couple of these I'm just going to glaze over, but the idea of being wrong, okay, has a lot to do, as you mentioned here, the strong emotional outbursts. So, if you want some comedy, as I talk about a lot publicly in many, go to Google, or I'm sorry, go to YouTube, and you can go to Google, I guess, too. It's the same damn thing. And just type in Samsonite commercials from the early 70s, or type in Samsonite Gorilla commercials. They get tons of views. This is probably the single best sort of comical analogy I could come up with for that inner monkey, right? So the best traders out there, in any area of life, they have the ability to remain calm while it's just absolutely bananas around them, right? Faith in the Forex Grail. So I've talked a lot about the Holy Grail, right? And the Holy Grail in trading really very simply is risk to reward, right? If you have win rates of, even something as low as like 40-45%, right? Which many traders do, but you have tight risk and you do not take large stops, you can afford to have 60% of your trades lose and still make money. Why? Because you have a tighter defined set of stops, right? In an area which is going to go or be attracted to, or have some sort of magnetization up to an area. I don't know, is that a word? But know that. And honestly, that really is the Holy Grail. And now there's lots of other things, arguably, you can bring into that definition, but the best traders out there have win rates of anywhere between 45 to maybe 65, or some cases slightly higher, but they just don't take big losses, and they totally let their winners run, right? Take some profit on some, let your runners do the real heavy lifting for you. So I talked a little about this in the beginning, this constant craving to be trading all the time, right? Now, a lot of this is just, just getting sort of your head around your emotions and just being like an absolute robot, which I talk a fair amount about. But I do like the idea of dividing the trading account in two pairs. I actually never thought about this before. It's actually pretty cool. So maybe you could divide it up into, or set up to two different accounts, and it's very easy to do that with demos and or live accounts at almost any Forex broker. So maybe sort of divide them up and have one where it's sort of like your crazy account, maybe it's a demo, and then have another account be sort of your serious money, which is a live account. Too many open trades, so you just can't manage that. And obviously, if it's software that's running for you, or it's presenting trades to you, you don't always have to take them, right? I mean, if you understand the charts, you follow along broadly with what's going on, at least from a daily and or weekly perspective, you're going to have an idea where these pairs, in most cases, most of our subs are trading anywhere between 1 to 6 pairs. They pay attention to these calls. They know the developers, which in many cases are just as important, if not more, than my call. Because it's to that specific software each week. You're going to have an idea whether or not you should be accepting a trade or not. Now, intraday trading, this guy's more of a swing trader, wrote this article, so just skip this one. I don't agree. This is really just not setting stops. So always know where that zone is that I try and pay attention to. And I know they're really good about this with the bounce arrow go and the Hawkeye guys. But, essentially is, take profit. But, if you have some left over, essentially know where your stop is. You can always bring the stop down to break even, obviously, or begin to trail it as profit grows with maybe some of your runners, right? But don't just go into it without a stop. I don't know that I agree with the inability to think in percents, but just get to know that, and you can go through all this stuff here. I think part of the problem is that, and I'm probably one of the few mentors out there that just doesn't believe in covering up your P&L, okay? Unless you are just emotionally bananas about that, okay? In which case you don't want to look at it. But a lot of mentors, especially some of the ones that I learned from at Goldman Sachs way back in the day in terms of market profile and order flow and all that fun stuff, they always would basically force the junior traders to cover up their P&L. I don't know that I necessarily agree with that. Because if especially if you're thinking in terms of percents, or you're thinking in terms of just risk reward, right? 3 to 1 minimum, right? 4 or 5 to 1, much better. You're better able to do that just mathematically, being able to see what's going on in the account, or at least that. But and maybe that's just me, and maybe that's bad advice to most new traders, because I learned this is why I've never blown accounts out. I think I've lost, I don't know, probably 10 G's trading futures. It's because I absolutely grasped the concept of the inner monkey very early, and I paid very close attention to risk reward. 3 to 1 was minimum for us. I rarely took trades that didn't offer at least a 4 or 5 to 1. That wasn't an extreme out trade that I talked a fair amount about. Just taking sort of stuff that's just wildly out there, way out in Bollinger Bands, or just you just have a much higher win rate on a really protracted move in anything that's just blown one way or the other. But those are tough trades to teach, because unless you really understand technical analysis, you're not going to know where that potentially could stop, right? And it is sort of a step in front of the freight train type move, but they have real high win rates if it's executed correctly. So what else I want to say about this? Yeah, I think I pretty much covered the big picture. Try to give you guys a cliff notes and everything, but in this particular case, I absolutely would share this to all your teams. I'll post this inside once we get access to it this week. I'm going to post this inside the new AP Social as well, AP Live. So that's pretty much it. So quick and dirty this week. If anybody's got any questions, always feel free to ask them. Try to do these at 10 a.m. and I should say at 10 a.m. on Tuesday and Saturday every week. So I wish everybody a great week. Stay healthy, be kind to each other. Don't listen to the mainstream media because they're full of BS. May the trades be with you.